Welcome back. What an unusual housing market we have right now. So for example, have a look at this. In October, there's approximately 500,000 fewer houses for sale this year compared to the average October in 2017 through 2019. However, housing inventory is still rising, which is highly unusual for this time of year because normally the number of houses for sale tends to decrease in October. Could this be an early indication that home prices are about to decrease? Stay tuned. Also in today's video, this is based on a new report from Realtor.com that covers the entire month of October, which is actually the first report I've seen that covers the month of October. So for example, the National Association of Realtors will not publish their October's numbers for another 3 weeks. And the CoreLogic S&P Case-Shiller Index was just announced a few days ago regarding home price trends for the month of August. Before we get started, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can be more informed about whether you should be buying or selling a house. Also, help me reach 100,000 subscribers by year end. We're only about 4,000 shy at the time of filming this video. So I have a lot to share in today's video. Let's begin. So here's the actual report from Realtor.com just announced today, which is November 2nd here. Let's first talk about housing inventory. This is very much an early indication of what lies ahead with the U.S. housing market. And again, inventory is rising right now in October, which is highly unusual. Inventory tends to peak in the summer months and not in the fall months here. According to Realtor.com, there was approximately 2% fewer homes for sale nationwide in October compared to the same time frame in 2022. So year over year, housing inventory is down 2%. The inventory of houses for sale in October grew by 5.1% compared to September. So in one single month, inventory levels increased by 5.1%. Now here's the kicker though, because in September through October, normally we see inventory actually decreasing and not increasing by 5.1%. However, despite this small monthly increase, active inventory, or the number of houses for sale, is down by about 41.8% compared to the typical October 2017 through 2019. So this graph here is kind of a mess here, but this line right here is this year. The orange line right here, maybe it's yellow, is last year. The bottom line right here is 2021. And here is pre-COVID levels, 2017 in blue, 2018, and then 2019. So right now we have approximately 730,000 houses for sale, which is roughly on par with last year's levels. Again, only down by 2%, and also on par with 2020 as well. We're still higher compared to 2021, but much lower compared to the average pre-pandemic levels here. So a couple of things I want to mention regarding this chart here is that inventory levels, again, are still increasing. Whereas you look at pre-COVID levels, inventory tends to peak around July and August. So highly unusual to see inventory still increasing, whereas it should be decreasing this time of year. Now that's one thing. Another thing here is that inventory absolutely skyrocketed in May, June, and July last year, more or less doubling in about 3 months here. So for example, in April, there's around 375,000 homes for sale. And by the time we hit July, we're at 700,000. So inventory nearly doubled in 3 months, which really shocked the housing market. Now, we're not seeing that this year, of course, because inventory is slowly increasing each and every month here, but it actually has been increasing at a faster pace this October compared to the previous few months here. Now, I mentioned that because we did not see this sharp increase of inventory like we did last year, but last year, inventory levels more or less plateaued for the remainder of the year once we hit July. Whereas this year, inventory levels is increasing over the past couple of months here, sharper compared to last year's levels. And this could be an indication that home prices will decrease here very soon. I will say that normally during this time of year, home prices tend to decrease, which is called seasonality, where home prices tend to decrease in the winter months. But couple that with about 7.5 to 8% rates right now, and due to the fact that inventory is still increasing, even though the number of new listings is falling, could be a recipe that home prices will decrease at a greater clip in November and December compared to years past. Having said that, I would imagine we're not going to see the sharp decrease in prices like we saw last year because inventory did not double in about 3 months like it did last year. Now, here's another way to look at inventory levels. This is according to altosresearch.com. They look at inventory levels for a 7-day moving average here. So right now, there's slightly less houses for sale compared to last year. Right now, there's about 563,000. 1 year ago at this time, there was 578,000. So even though we're a little bit below last year's levels, just like Realtor.com, we're still well below 2019, right there, and also 2018. Again, down by about 40% compared to pre-COVID levels. One more thing I do want to mention regarding inventory levels. I know I said that I was almost done here, but I do want to mention this as well because I tend to talk quite a bit on the channel regarding the demand side of our housing market, but also I talk about inventory levels as well, which of course is the supply side, right? So we all know that demand is falling big time, right? We have applications for mortgages at over a 20-year low, the lowest level since 1995. We have all-time record lows for housing affordability, and we're seeing a huge pullback in home sales. So based on the seasonally adjusted annualized rate, according to the National Association of Realtors, for September, it was at 3.96 million, a 13-year low, the lowest level since October 2010. So I think we all can agree that demand is falling big time given the sharp rise in prices and rates this year. On the supply side, though, we're still down greatly compared to pre-pandemic levels. And on top of that, inventory is still increasing, but not shooting up. If inventory was shooting up big time, let me just zoom in here. If inventory levels was absolutely skyrocketing like it did last year, we should expect to see a sharp pullback in prices like we did in the last half last year. This year, inventory levels is still increasing, but not the same pace last year. Of course, a lot could change because when we tend to see a decrease in demand, we see fewer contracts being signed, and also, of course, we see fewer home sales. And because of that, houses take longer to sell. As more and more houses get listed for sale each and every day, really, we tend to see inventory rise. That's exactly what happened last year, and that's exactly what's happening this year as well, just not increasing at the same rate last year. In any case, let's move on and talk about pending home sales. So pending home sales, of course, is a measure of contracts being signed between buyers and sellers. This report, by the way, only covers existing houses. It excludes brand new home construction. So according to Realtor.com for the month of October, compared to last October, pending home sales decreased by 7.6%. As I mentioned here, pending homes, or a measure of contracts being signed, is an early indication of the direction of closed home sales in the months to come. And keep in mind, for the month of September, we're at a 13-year low right now at 3.96 million. That's the annualized pace of home sales according to the National Association of Realtors. So because pending home sales are still down compared to last year, and in fact have been down compared to last year every single month this year, this implies we're going to see a very low level of closed home sales in November and December. And that, of course, is because of seasonality, but also because we're seeing a lack of contracts being signed as well. Okay, let's talk a little bit more on the supply side as well. And let's talk about newly listed houses when a homeowner lists their home for sale. So new listings on a national level were down 3.2% compared to October of 2022. That actually is an improvement though, because in September this year compared to September last year, last month's report, new listings decreased by 9.1% versus a decline of 3.2% this October year over year. It says while listing activity declined seasonally because new listings tend to decrease in October through really January, it says while new listing activity declined seasonally, the count of newly listed houses in October only decreased by 2.6% compared to the previous month. So from September through October, new listings decreased by 2.6%. However, what's more normal though is a decrease of 5.8%. That's the average since 2017. So big picture here, new listings are still down compared to last year, but not down as much compared to September because that was a 9.1%. On top of that, we are seeing a seasonal decrease in the number of new listings, down by 2.6% compared to the previous month. But that is not as bad as what we should see because the average is a decrease of 5.8% month over month in October since 2017. Now, here's a better way kind of describe this here. Here's the actual chart itself. As you guys can see here, new listings down by 3.2% year over year. Now, here's what is entirely different compared to last year. Here's last year. New listings basically fell off a cliff once we hit July. That's because rates more than doubled in less than 12 months. And because of that, a lot of people did not want to sell their houses, right? So we saw a sharp pullback in new listings. This year, new listings are decreasing, but not at the same rate we saw last year. That's why we're only down by about 3% year over year versus the 9% decrease we saw in September compared to September of 2022. And that, of course, is because in September last year through October, new listings fell big time, whereas this year, they only decreased slightly. So this is really impacting the rise of inventory levels as well, even though it has been decreasing over the past several months now. Now, if you guys want to see a real estate market crash, we need to see this graph here going straight up, right? We would need to see an environment in which supply far outweighs demand. And right now, we're not seeing that because new listings is down, active listing inventory is down, especially compared to 2017 through 2019. But if you guys want to see a real estate market crash, we would need to see this number basically going like this. That would be a recipe for a disaster. And I'd be ringing all the bells saying, hey, a crash is coming. Right now, we're not seeing that. Of course, there's a lot of headwinds right now. Record low housing affordability, 8% rates right now, et cetera, et cetera. But if you guys want to see a crash, we need to see inventory and new listings far outpace the demand side here, right? So far, we're not seeing that just yet. But of course, make sure you're subscribed. I'll definitely keep you posted. In regards to inventory levels, inventory decreased in 33 of the 50 largest metros compared to 12 months ago. However, some southern metros saw significant rises of inventory like Realtor.com reported about a month ago. So for example, Memphis, Tennessee is up by 30.3% year over year. New Orleans up by 26%, and San Antonio, Texas up by nearly 21% year over year. Despite higher inventory growth compared to last year though, most southern metros are down compared to pre-pandemic levels. In fact, among the 50 largest metro areas in the United States, only Austin, Texas and San Antonio saw higher inventory levels or a higher amount of houses for sale compared to the typical October in 2017 through 2019. Now that is something they have been mentioning for quite some time because every single metro except for Austin, Texas has been down compared to pre-COVID levels. So again, Austin, Texas is another metro here still down. So San Antonio, Texas and Austin, Texas are up compared to 2017 and 19. It's pretty wild that there's only 2 of the 50 metros that are up. All the other metros have less inventory levels. Let's also talk about how fast or how slow houses are selling right now. The typical house spent 50 days on the market. So days on the market is a time frame when a home seller lists their house for sale until they accept an offer from a home buyer. And that's recorded when a house actually closes escrow or the sale is finalized because days on the market is only for sold houses. In any case, days on the market is 50 days. this October, which is 1 day shorter compared to 12 months ago. So houses are selling 1 day faster compared to 12 months ago. On top of that, days in the market this October is about 2 weeks less, or 16 days less compared to the average October from 17 to 2019. Now let me share the graph right here to kind of explain this right now. So here's 2023 right now, days in the market at 50 days. 1 year ago, it was at 51 days, which is the orange line right here, or yellow line. So houses are taking longer to sell compared to 2021, when days in the market was around 43 days. Now it's at 50 days. But looking at 2017 through 2019, days in the market was around 65 days. So houses selling much faster compared to them, at least on average, of course, though, right? Let's also talk about asking prices. So for whatever reason, Realtor.com does not cover sold prices, but they do cover or provide analysis regarding asking prices nationwide. So the national median list price decreased seasonally. So asking prices tend to decrease during this time of year, right? So the median list price decreased from $430,000 to $425,000 compared to the previous month. On top of that, the median list price remains stable compared to 1 year ago. So asking prices are flat compared to October 2022. Listing prices have been buoyed by scarce inventory levels. As reported to you guys, inventory levels is not skyrocketing like it did last year. And of course, we're well below 2017 and 2019. However, inventory is still rising though. So it could mean that home prices will fall much faster in November and December than we normally should see, because we should be in an environment in which inventory levels are falling, but in fact, they're actually going up. In any case, while the median list price has remained relatively stable compared to last year, higher rates compared to last October increased the monthly cost of financing 80% of a typical house. This means if you're buying a house, you're putting 20% down and you're getting a loan for 80% of your purchase. This means your payment, based on that scenario, is increasing or has increased by $166 per month, a rise of 7.4% compared to 1 year ago. That's a new record on top of what was already the highest amount since Realtor.com began tracking their data back in mid-2016. And have a look at this, because this is absolutely wild. This has increased the required, keyword required income needed to purchase a median price home in the United States has increased by $6,000 or $6,600 to $120,000. This means the required household income to buy a typical home this October nationwide is $120,000. Let me repeat this, you need $120,000 in income per year in order to qualify or to afford an average price home in the United States, which is absolutely insane and very much sad. We need more affordable housing. Realtor.com also provided the share of price reductions as well, because that has also been increasing at a much faster clip than we should be expecting this time of year. So a price reduction, of course, is when you're asking too much for your house. Let's just say your asking price is $500,000. You don't get any offers in a month, so you decrease your asking price by $10,000, right? That is the price reduction. So the percentage of houses for sale with a price reduction decreased from 21.5% in October of last year to 18.9% this year. However, the share of price reductions is still increasing well into the fall season, which is unusual for a normal year. Realtor.com will be looking to November or next month to see if the share of price reductions begins to fall in line with 2022 and 2018, or whether this is a signal for greater softness in listing prices. So in an environment in which the share of price reductions is increasing greatly, like it did in the last half last year, that really causes home sold prices and of course asking prices to fall as well. So here's a chart showing the share of price reductions right now. And this again is kind of a mess, so my apologies here. So this line right here is this year. The yellow line again is 2022, which is just absolutely crazy. Look at March. March, the share of price reductions was only 6% last year. But by the time we hit, when was this? July, the share increased to 19%. So it more than tripled in less than 1 year. This year, it's still increasing from 12% in April. Now it's at nearly 19%. What's unusual though is that the share of price reductions is still increasing just like it did last year. But look at 2017 and 2019. The share of price reductions peaked in July, then it decreased for the remainder of the year. This year, just like inventory levels, the share of price reductions is still increasing just like it did last year, but not increasing at the same giant clip like we saw in the spring months last year. Therefore, to me, this implies we're going to see a sharper pullback in prices compared to what's normal during this time of year, but not as great as what we saw last year because inventory levels absolutely spiked last year. And of course, price reductions more than tripled in less than 3 months as well, or less than 6 months as well. Realtor.com also provided how each of the 4 major US regions fared as well, compared to 12 months ago, but also compared to pre-pandemic levels, which I'll share that with you guys here in a little bit. So this October compared to last October, they had the Midwest, the Northeast, the South, and the West. So active listing count, this is the percent change in the number of houses for sale for each of these major regions. All down compared to last year, except for the South, saw a small gain of 3.3%, whereas the West fell big time, down by nearly 25%, right there. New listings are down for each of these major regions here as well. The West falling the most, down by 10.2%. Asking prices are all up compared to last year. The smallest gain is actually in the South, up by 3.1%. The Northeast is up the most, up by 9.3%. Now, when looking at these numbers here compared to the average October 2017 through 19, the numbers here get quite a bit different here. So active listing count, all down by more than 25%. The biggest decrease is actually in the Northeast, down by 58%, again, compared to the average pre-pandemic levels. New listings are also down greatly as well. Not down as much in the South. That's kind of interesting to see that, but down big time in the Northeast and the West. And also asking prices are up by more than 30% in each of these 4 major regions as well. Now, one thing I will not cover in today's video is this right here. They actually look at the trends I shared in today's video for each of the largest 50 metros. So instead of going over that in today's video, which would take me like 15 hours long, I'll provide a link to this report in the video description below. I appreciate you guys watching today's video. Like and subscribe. Have an awesome day and look forward to seeing you on the next video.